I'm assuming you watched part 1 where I covered the first 5 tips for first-time home buyers. If you haven't, you can find the link in the description below. Tip number 6, what's required to get a loan? This can be a little overwhelming. The lender is going to document what income you'll be able to produce that meets the lending guidelines, which determines that you have the ability to repay the money that you're going to be borrowing. If you're employed, if you're using employment income, how long have you been there? Do you work variable hours? What's the average of hours you're working? Are you self-employed? Do you have a second job? These are all the questions that will be going into the employment part of the equation, as well as the income part of the equation. Employment usually drives income unless you're retired and receive Social Security or a pension. Once income is determined, the lender will look at your credit report and ask you about the debts that you have. In addition to anything that's on your credit report, do you pay child support and or alimony? That also will be calculated into your debt to income ratio. Your DTI is also a lending guideline that each lender has. Once we evaluate your income and what your debts are, we can back into the price point minus the down payment of the home you're pre-qualifying for. Tip number 7, loan programs available. As a general rule, there are 4 types of loan programs in our country. 1, FHA loan. 2, conventional conforming loan and conventional jumbo loan. 3, VA loans. And number 4, USDA loans. Each of these will set its own credit criteria and requirements. Tip number 8, who are the people on our lending team? Many times you're talking to your loan officer or their loan partner, but realize there is a group of people supporting you on that lending team. A couple of them are your loan officer and a loan officer support team, which can be a loan officer assistant or a strategy technician. The reason there are so many people is it takes a team in order to get you through the loan approval process efficiently from application to close. Once under contract, a loan processor or loan coordinator is responsible that you're keeping to the timeline. Ask for additional documents as needed, issue initial disclosures, and ensure you're closing on time. There is also the underwriter. This is the person who signs and approves your home loan. They're going to review all of the documents that the loan officer and team has submitted into underwriting, and they will ensure that it meets the lending guidelines. Once you have the loan approval, the loan closer will be the person responsible for preparing your closing disclosure and final loan documents. Once you sign the closing documents, behind the scenes, the loan funder will be preparing to have the wire for your home loan funds sent on the day of closing. Tip number 9, how do you get a low interest rate? One way to get a lower interest rate is to maximize your credit score. Better credit drives a lower interest rate. You can also consider a seller buy down program. That's when a seller would contribute to your closing costs, and the lender in that scenario will use that contribution to lower your interest rate. You could also pay discount points. This is a cost associated with a respective interest rate. For example, maybe the lender is quoting you a particular rate with 0 discount points, meaning no cost for that rate, but you want to buy the rate down. Let's say you ask the lender, what rate can I get if I pay a discount point? A discount point is 1% of your loan amount. On a $400,000 loan, it would be $4,000. So now you'll want to know how much can I buy down my interest rate with the $4,000. Interest rates and discount points vary daily. They vary on loan programs, the occupancy. Will it be your primary residence, second home, or investment property? There's a lot that goes into the interest rate discussion. It's good to know that when you see things published, in many cases, that is for point in time. Make sure to read the fine print. The best thing to do is to speak with your mortgage advisor to determine the best strategy for you. Tip number 10, things not to do during the loan process. Don't change your job unless it's absolutely necessary. Don't buy a car or large appliances. But before you start buying things, be sure to speak with your mortgage advisor. Now that you know my top 10 tips, you may be interested in getting pre-approved. We can put together a personalized plan just for you. Schedule your free consultation with one of our team members today by clicking on the link in the description below. And if you haven't done it yet, don't forget to smash that like button and subscribe.